Hey everyone, I'm Tony with Clarkson Santoro, and this is our market update for San Ramon from Friday, March 10th. In this series, we update you on the latest trends that are occurring in our market here in San Ramon, and using our 50 combined years of experience helping clients buy and sell homes, we explain what those numbers mean for you as a homeowner or as someone who is looking for a house that you'll love to call home. We're starting a new version of this update this week and doing it as a live broadcast. So hopefully this first one goes well, and we'll be doing it like this from now on. So without further ado, let's look at this week's market statistics. Starting with inventory. The number of active homes increased by 10 this week. We're up to 25 active homes. The average asking price for those homes is $1,933,000, which is down from last week's average price of $2,065,000. 3 homes went pending this week, which is one less than last week, with an average asking price of $1,846,000, which is lower than last week's average asking price of $2,324,000. And finally, the sold homes. 5 homes sold this week, which is less than last week, but the average sales price of those homes was $1,833,000, which is higher than last week's average closing price of $1,501,000. So now that we have looked at this week's stats, we can talk about the trends that we pay attention to that will help us figure out where the market might be heading. So starting with inventory, like we already talked about, 25 homes on the market is 10 more than we had last week, and much more than we have had for the past few months, or a couple of months, I should say. 25 homes is still not a very high number. The average number of homes on the market in San Ramon on any given day throughout the year is about 50 homes, so we're still about 50% of an average market, but that's a 66% increase from last week, so that's a little bit concerning. The good news, one piece of good news with this though, is the average asking price of those homes dropped this week, which points to the idea that we probably had more lower price homes enter the market, and those homes have gone pending pretty quickly in that price range for the past couple of months. So I would expect inventory to come back down here pretty quickly. All that being said, our score for this week is 75, which is a little bit lower than last week, but still very much in a seller's market, because like I said, we're about 50% of a normal market's inventory level. Now, looking at turnover, this one is another drop again. We had it above 100% for the past couple of weeks, and it's now back below 100%, down at 68%. We had a sudden influx of inventory. The pending numbers haven't caught up yet, and we'll see a couple go pending this weekend, and that'll kind of even itself out, and we may be back to a 100 or higher turnover rate next week. But we'll have to just wait and see. So we're dropping the turnover rate score down to 45 this week, which is just slightly leaning towards a buyer's favor. The over-under price continuing to improve this week. So we are now only 22,000 under asking on average, or 0.5%, which, I mean, really, that's basically a wash. Anywhere within 1% plus or minus the closing price means that buyers and sellers are really starting to value properties evenly, as opposed to earlier in the year where buyers were undervaluing homes compared to what sellers thought, or compared to last year at this time. Yeah, March, we were still seeing over asking a lot. So if we're in the plus or minus 1% range, we're in a very neutral market where I think it'll be easy for sellers and buyers to come to agreement on home value. Because we're still a little bit under asking price, we're going to keep this number below 50, or that neutral number. We're at 47 this week. Sales price increased this week and that kind of reinforces what we predicted last month. We said we thought we'd have this price come up in the next few weeks, and we have seen it for 5 weeks now. The average ask or closing price has increased. We're up 72,000 from last week on the 30-day rolling average, which just means that the higher priced homes that had been sitting through January and the beginning of February started to close, which pushes that asset or closing price up a little bit. So we are increasing the score for the closing price or the sales price to 59. The tech equities market has kind of remained pretty level for the past 5 weeks or so. We watched the Triple Q fund specifically because it kind of tracks the overall market sense of the Silicon Valley and the tech industry, where we get a lot of buyers from. So if those equities stay strong or stay neutral, that means buyers will feel confident that the money that they have in those equities will remain, so they're more comfortable making those bigger purchases like buying a home. There hasn't been a lot of new talk about layoffs, but that's always the other concern with the health of the tech industry. But as long as equities stay level, I think that kind of plays a little bit towards a seller's favor, because even if they're not increasing the value of their stock funds, as long as buyers aren't afraid of losing a lot of money in their tech funds, their stock equities, they'll be comfortable making those big purchases. So this number is still relatively low, and it's kind of staying in the same range that we have had it for the past few weeks, just because that tech market has kind of stayed the same. So 34 this week. Still kind of buyers' favor, but not really, because buyers would much rather have their tech equities increasing. And then finally, interest rates. This is another kind of downside to this week's update. Interest rates are up again. They've increased for the past 6 weeks in a row now. We kind of started off the year with this downward trend, and it was looking hopeful, actually, end of last year, beginning of this year, and it was looking hopeful that we would get back to below 6% for the average 30-year mortgage. But the Fed keeps talking about pushing interest rates to try and combat inflation. So as long as they keep doing that, I don't think we'll actually see this drop again anytime soon. So that is one downside to this update. So we are dropping this market score down to 30 this week, where it was kind of creeping back up for a little while. Overall, this market still feels good. It doesn't feel like overwhelmingly seller positive or buyer positive. I know a lot of people were beginning this year talking about, oh, here we go, let's watch this super hot spring market. So prices are going to go crazy again. And that just hasn't happened. And as long as interest rates remain high or keep moving up, I don't think that this market will take off like people were talking about. It'll be interesting to see where the interest rates, or not the interest rates, the inventory goes, if we do kind of catch back up with the pending sales, or if that turnover rate continues to stay soft and below that 100% range. The good news is housing prices are increasing. The over-under value, where the house is selling compared to what it was asking, is getting back to zero, and equities are staying strong. So it's kind of like this market's in a little bit of a tension where there's neither huge benefits for a buyer or a seller, and I think it still just depends on the price range that you're looking at. Higher price homes, they're going to sit for a little bit longer. Lower price homes, you're probably going to have to fight off a couple of other offers if you're looking to buy. So we're scoring this market at 48 this week. Overall, still very neutral. Like I said, doesn't really favor a buyer or a seller all that much. It does lean a little towards the buyer right now just because interest rates are up and inventory is up a little bit, giving buyers a little more option, which means sellers need to be more aggressive and thoughtful about how they're marketing their home for sale. So I hope that information was helpful to you. Please subscribe if you haven't already. It helps us get this information out to more residents here in San Ramon who are looking to either sell or buy a home. If this information is helpful, share it with a friend, and I'll see you next week.